All right, chapter 5 is dealing with kind of bank stuff so far. Section 5-1, we dealt with endorsements. We have blank endorsements, restrictive endorsements, and special endorsements. Blank endorsements are going to be where you just signed your name on the back of it. And if you sign your name, then anyone can cash it. A restrictive endorsement says this is the only thing you can do with the account. So the only thing you can do is deposit it into this bank account. Okay? A special endorsement is going to be where you transfer ownership from one person to another. The other thing that we did is we went through and filled out actual check stubs and checks in section 5-1. Yesterday, 5-2, we dealt with bank reconciliations. There are two sides to your bank reconciliation. One side that starts with your check stub number. The other side that starts with your balance on your checks, on your bank statement. The main thing you have to realize at the very end, those bottom two numbers need to equal. Okay? We also had to go through, the bank charged us yesterday and then worked together we did a $2 service charge. We had to do that $2 service charge had to be put on our bank, on our check stub, and then we also had to journalize it. Bless you. In the journalizing, we went through and did a debit to miscellaneous expense. Sometimes businesses are going to have a specific service charge expense or bank service fee expense that they're going to have, but for yesterday we just used a miscellaneous expense. So section 5-3 for today is going to be dealing with the fact of what do we do if someone writes me a check and there's no money in it? So Fox, he comes to my business, he writes me a check, I go and cash it, and then the bank comes back to me and says, sorry, Mrs. Gressel, there's no money in that fund, so we are not going to be able to deposit that check into there. So really what happens is I go to the bank, I go to the drive-thru, or I walk in and I give them all my checks with a deposit slip. Have you guys done that before today? Like had a deposit slip where they put it in there? And they give you a receipt saying, yeah, sure, whatever. So what's going to happen is I would do that for my business. And it takes a while. The bank would physically go through and process each check. So it might not be until the next day that they get back to me and say, hey, that check isn't going to work. But I have already, in my statement, gone through and added the value of Fox's check. So the balance of my check stub, it has been increased by Fox's check, but now the bank says no, and they're going to take it out. In fact, they're going to take out the value of the check plus a fee. So what I have to do is if I have a dishonored check or a check that was written that doesn't have any funds for it, I have to go in and physically do a cash credit because the bank took that amount of money out of my account. The source document for that would be an M, not a check number. So that's what we're going to do with the dishonored note. The other thing we can do is sometimes we can have funds that are going to be transferred electronically or an EFT, electronic funds transfer. So instead of physically receiving or writing out a check, I could just say, all right, do an EFT. So it's no different than if I buy something online on Amazon and I use my debit card or whatever. But the funds are just being transferred electronically instead of writing a check. So we're going to look at section 5-3, different ways that cash can be affected in your account without using a check. So this should be a relatively straightforward one, an easy one for a Friday today. And considering you got a long weekend. Anyone do anything fun over the long weekend? She's going to lacrosse, touring a school. Anyone else touring schools? Working? All right. I'm going to the Badger game tomorrow. Hope they win. I will. All right, so write the answers to the problem below. Your instructor, that's me, is going to guide you through the following example. Enter the following transactions on page 6 of the journal. Well, that's really nice of Applia. They already have the page number on the page for us. So we just have to do transaction March 15. Received a notice from the bank of a dishonored check from Christopher Icola, $63, plus a $10 fee for a total of $73. So memorandum 121. So basically what's happened is they wrote us a check. Check wasn't any good. I originally increased my cash account by 63, but they took out 63 plus 10. So I have to go in here, put the date of the 15th, How much money does Christopher Icola now owe me? 73. So I'm going to do accounts receivable. Christopher Icola. Source document is M121. We're going to do a cash credit of 73 and a general debit of 73 because that's how much Christopher Icola now owes us. Second transaction, the 16th, paid cash in account Spinoza Enterprises $135 using an EFT memorandum 122. So basically, we paid them electronically instead of writing a check. So this is going to be no different than when we pay cash on account and our source document as a check. So we're going to do the days the 16th. We're paying on an account, and on that account is accounts payable. Spinoza Enterprises, source document of M122. And we're going to do a cash credit of 135 because it says paid cash. And then I'm going to do a general debit of 135. The 17th, purchase supplies, $31 using a debit card and memorandum 123. So the date is the 17th. What did I get more of, Thomas? So what's going to go in my account title? You got it. Source document is M123. We're going to do supplies debit for 31 and cash credit. And that is worked together. Go ahead and try on your own.